Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on BFI. We love the tiny market cap, and who doesn't like burgers?
Well, that's fantastic. A really smart decision, young man. We can put that check and it's gone.
Hey everybody, welcome to the Laughing Stock. Happy Saturday. Johnny, how are you?
Yeah, I'm good. I love my burgers.
Yeah, those burgers are good. You ever had BurgerFi? You do? Yeah, well, you probably don't have them over there, do you?
I have never heard about that company before, but I'm sure. Yeah, well, have you? Is it good?
Yeah, it's a little pricey. That's the only thing is like I don't know. And there's so many gourmet burger places in the United States now. Like there's a lot of competition for it, so it's kind of a tough sell. But
yeah.
But there's other ones that I find are probably better than that one. So I don't know. It's just a saturated market, a lot of competition.
Yeah.
You know.
But I will always be bullish on burgers, though.
You want to be bullish on something, bullish on Cava. Man, that place has got really good food. It's definitely higher quality, and those are just like exploding like fire all over the United States. Like it's the next Chipotle in my mind.
Okay, sounds good.
Doesn't have the same margins that Chipotle has, which is why a lot of people were bearish on it. But they just keep, I don't know, that place is packed and they're spreading all over. Like in my mind, it's only a matter of time before that's the next. That could be a really big stock. I know it just had a huge day on Friday, so
yeah,
we'll see where that goes.
Yeah,
but I like that business.
Yeah. I see a lot of green in your dash here. How's your portfolio been doing this week?
Portfolio's definitely up. Just looking around it, yeah. I mean, they're talking rate cuts, so everything small cap had a great week. You can see that like Russell 2000 up 3%, 600 value, blah blah blah. All the stuff that I tend to look more into is all up. A lot of my risk type category stuff's all up, so all looks good. The portfolio this week ended up, check this out, lucky number 7, 7.77. So finally back in the positive territory. The whole week though, 10% for the week, so great week for me.
Yeah, that's cool.
MAXN had a big week. It's kind of pulled back a little bit, but it's still in like the 17-cent range, which it got up to like I think like 21 or 22 cents, somewhere around there. But this was just at 11 cents. So I know we're talking a penny stock here. So it doesn't sound, but like it's a big move. 11 cents to almost doubled in a week. And now it did, like I said, it did pull back, and who knows where it's going to go in the future. But I'm just kind of holding the position for now. Like I said, I'm not going to add much more. I was thinking of trying to get it up to about 10%. And then, I don't know. I'm not sure if I'm going to continue to swing trade it or maybe just kind of hold it for a while. Because to be honest, if everything works out and that factory ends up kind of going through and getting built, this could turn into a multi-bagger very easily. So I'm still pretty happy with the MAXN position, and if it really does pull back, I'll probably I don't know, I might just hold it. I don't know. I'm trying to figure out what I want to do with it. I did take a position in IMMR this week, which probably a lot of people are confused on it. And if you've been following IMMR, which you and I were involved in the whole BNED thing, so we know IMMR and we know BNED. I'm extremely bullish on BNED. This is kind of a way to play BNED without actually being in it, because now I think BNED's gotten up there in terms of its price, and I think IMR
13, right?
is cheap. And the reason I say that is, number one, I don't know if anybody actually cares or reads any of these things, but when you go to IMMR, I mean, their last earnings report was kind of crazy. It's pretty rare that you get anything like this. Reported earnings of 28.9 million, which on a per share basis is 89 cents of profit, and a revenue of 99.4 trillion in the period. Like, when you're on Yahoo Finance, point out many companies where your earnings match your revenues. Like, this is not very typical of any company. And one thing that a lot of people have been bearish on IMMR with is people are saying that, okay, it's a one-off thing. They made the big investment in BNED. That's not... The underlying business of IMMR is profitable, first off. So we have a profitable company here that's slowly been growing over time. And then on top of it, management could have put in their extra money. They could have put it in dividends. They could have done share buybacks. They could reinvest in the company, and they decided the best thing to do was invest in another company. And they invested in BNED, nailed it perfectly, now doubled that cash position, and people are saying that, like, it's not going to happen again. They can't pull it off. I'm sure anybody, when they first invested in BNED, a lot of people probably were like, wait a second, how? Like, what is the point of that? And people are arguing that BNED's not going to become profitable. I'm sorry, I think BNED's going to be profitable by the end of this year. And and I think their position is going to continue to do even more, or to do even better. So to think that this can't get right back up to this range here, I think any kind of catalyst here is going to push this back up. Company's doing fine, in my opinion. PE ratio's 5 right now. That's kind of a dumb ratio just on the company, the underlying company itself. So I don't know.
I think what you are saying here is not stupid at all. I think a lot of people were conflicted a bit when that happened, if they should continue with BNED or jump over to IMMR. And what is the BNED at now? Like $13? Did it break 13?
To be honest, it did.
Yeah.
And remember, they're still in here. So this is still, every time BNED goes up, this is IMMR's cash position going up.
Yeah. And BNED, we did a lot of good research, in my opinion, on them. The thesis is playing out now. I don't think... do you know if that is still on in November? The poll?
The what?
No, the decision of keeping the model or not. Is that in November still, or did they...
No, they totally got rid of it. The Department of Education literally canceled the whole thing.
Oh, they have done that. Okay.
And that was another bearish point. Whether it was a Kamala presidency or a Trump presidency, if Trump got in, a good chance he's going to just tell the Department of Education to stop it all. If Kamala got in, there's a chance that that might be something they're interested in. But her and Biden during this current presidency decided to abandon all that stuff. Now, it's not to say it can't come back in the future, but as of now, it's all just done. They just stopped it all. No. They don't want to do. Yeah. They're not going to adjust anything. So I think that's why you're seeing this appreciate so much, because now Now the runway for BNED's looking very clear.
Yeah, and the in our minds, then I can say that we think there's no way BNED will not be profitable.
Yeah. And and you know, I will always kick myself for just not holding BNED, but because at this point this would have been a massive gain for us. So I still hold my initial thesis. Everything stayed. I think for me to be profitable on BNED, it would have had to get to like $5. So this would have been more than a double. This would have been like 100 or 200% return for me on a massive position. So my bad on not holding it. That was really dumb. But at the time, I you know, as of, you know, we didn't know, number one, that there was going to be this crazy meme trade, and you would have gotten diluted. That was the issue, is the dilution period. So post dilution, it looks great, which, like I said, going into the future, you know, I'm just going to wait probably on a company like this for the dilution to occur. The other thing too is the chart basically would have told us not to hold through that period. There's a lot of things that I would have done differently going backwards, but hopefully going into the future, I can nail these things much better, which we've been talking about how well the charts have been doing. And you know, I think BNED's another great example of this kind of thing. You know, this was the first big drop? Yeah, this was the big drop that was painful for us. And in here, this is the dilution here. So this is where, you know, it jumped up and then got diluted right back down. But, you know, in here, this is where it would become interesting. And you know, you could have rode this all the way up here. Which has been a really great return in 2 months.
Yeah. That's what we should have done.
Yes, that is what we should have done.
We made a lot of mistakes, different mistakes on multiple levels there. I'm not going to talk about it anymore. We have covered it in depth, I think. But I think you are thinking about IMMR here now. That owns a big portion in BNED. Like it's not a bad pick at all.
No. So, anyways, Now, I might have hopped in a little early, but to me, now this chart here, it did start to pull down. So I traded this a few times, and then, which was really just me kind of playing around and practicing with some things. And then I took my position kind of in here, which in hindsight was probably a bad idea. And I took it because the earnings report was so good, and it looked like to me it was going to turn around. Looking more at a longer term chart, I do realize we're in a bit of a downtrend here. So this timing might be poor, and I might have to hold this for a little bit to make this back. But I'm okay with that, which is, once again, you know, kind of understanding the thesis and believing in it. But but you can start to see here we are starting on just the daily chart. It looks like things are starting to smooth back out and possibly turn positive. My cost basis for it was just over like $10, so I'm down a little bit, but not huge or anything like that. So it's gonna have to be a little bit of a hold for me. But otherwise, though, do you have a
stop loss on this, Dane?
What's up?
Do you have a stop loss on this?
No, I didn't place one on this, just because I was treating this more like a longer hold.
Yeah.
I mean, if it really drops down, but see this, I didn't want to put a stop loss because on the Bollinger Band, it said it could get down to $9, which would be about a 10% down for me. So I didn't want to put it on there because I was nervous that it would trigger right here and sell me out at like the worst time.
Yeah.
And that's another thing too. You know, you and I haven't really talked about this much, but knowing where the bottom Bollinger Band is, if you're going to set a stop loss, you don't want to put it right there because that's a good chance that the price bounces there.
Yeah.
Like possibly the worst time to sell out.
Yeah.
So trying to see, it looks like my camera froze, but I'm not really sure. There it goes. Okay. So either way, so I'm gonna continue to hold that one for a little bit. So that's my positions. Currently, and then back to the portfolio. So we're talking. I'm definitely looking at getting back into ALTO here. I thought the chart looked really great there. We were talking about that right before the stream started.
Yeah.
I mean, this right here, this is all signaling a buy to me.
Yeah, it looks good. And to be honest, like you said, we talked just about it before the stream, but not only I think if you we're gonna show you some tweets soon about ALTO, but there was some comments there saying like the only reason that ALTO is not moving up towards $4 is because there's a big if around management, and I think that's 100% true.
This is all
Everything else
management
right now looks fantastic in my eyes, but there is a if. They need to deliver on that Q3 report that we have repeated a million times now. But you're never gonna own this at these levels if they execute on that report after the report. Then you are too late, you know.
Right. No, I agree. Speaking of important tweets, so, okay, management has to perform. Well, what's the biggest factor in them performing? It's crush margins right now. So, Jeremy, or Justin had just reported this on X, and, you know, someone had asked him, you know, what are crush margins compared to last year on the same date? And here's a great example. You know, literally almost double a lot of these days, and no matter what, higher. Look at December, 31 cents versus 11. November's 38 versus 20. October's maybe the smallest of the spreads, but I mean...
I just want to point out, like, if you go back and read comments around the Q2 report, Justin was actually a little bit low on his estimates. Not a lot. I'm not saying it matters a lot, but... they could be even higher than this, you know.
Right.
And I also want to say, like, a year ago, from what was it, like May to Q3, go and check the chart at ALTO there. It went from today's level to, I think it touched 5 before the massive drop, of course. But that was thanks to a very positive environment and the crush margins. And now we have almost the double on a lot of these crush margins, according to Justin, at least, you know.
Right.
So yeah, I'm bullish. If you can't tell, I'm bullish.
Yeah, and once again, I mean, you know, we're kind of in that same period, and you know, this is where the stock was trending before. This is why, you know, I talked about it, and I played this first move here, and then I learned follow the charts, because the charts tell you when to get out. And it started to tell me in here to get out, so I did. So I took some profit off the table, and I got out of ALTO. But once again, now the chart's starting to tell me to get back in again. You can see everything starting to turn around. Now this is a weekly chart, so it's a little bit longer, so it's going to be slower to react. So when I see that, and it looks pretty good on the long term, I zoom in here to my daily. And on daily, it looks like it's just starting to turn here. So my interesting bid would be at about this moving average of $1.43-ish, somewhere in there. I think it's a really good spot to start taking. If you ever see it drop down to like the $1.40 here, that's probably another great time to entrance, because that's your lower Bollinger Band. But either way, you know, if this turns into an uptrend, it doesn't matter where you get in. Any of these days, any of these prices, you could have got in at the very top here, and you know, you're going to have a huge return in a very short amount of time. Now, obviously, this is not investing advice. This isn't telling you to go do anything. I could be wrong, and tomorrow we could have one of these moves. So do not buy on that. But I'm just saying these are the kind of things I look for. It looks good to me. Somewhere in here, I will be taking a position for sure. So,
yeah.
But
And
do not buy just because I
also-
say anything. What's it doing after hours? Anything?
No, I think it
Just
was
up a little.
Yeah.
Volume's pretty stable.
Also, you know, I saw some comments again about people trying to say how wrong Justin are and stuff like that. And of course, he can be wrong. He has been wrong on other picks. Like I know Soluna didn't work out for him. DT has not worked out for him.
PBI did.
That's what I was going to. PBI story-wise has a lot of similarity to ALTO for Justin. He was, I think, involved in around the same time. He was very bullish, and then it just kept dropping and dropping, and issues with management, right? And then things changed. And go and look at PBI now. He's been absolutely right about it, and has more than doubled his position, I think. So you can slam, you know, a lot of investors, but I wouldn't do it to Justin.
And I mean, this is the weekly chart here, and I mean, you can see, regardless of the ups and downs, we're still in a great uptrend. And then if you back out, this is Justin. Where did he get in? Somewhere in here?
No, he got in.
Was he way back here?
Even before, yeah.
So no matter what, the guy's still up. Even on this big pullback here, which must be frustrating because maybe he just didn't get out in here. He thought it was going to go more.
Yeah.
But I mean, man, look at these. Look how crazy things got in 2021.
Yeah.
That was such a wild time.
Yeah.
This is, by the way, when I first started looking at investing, which is hysterical. That's when I became interested.
Yeah. We are the same. But Dane, did you see Justin posted a new article on PBI? And do you know if you know how you can have the option to listen to the article now on Seeking Alpha?
I did not know that.
You can listen to it on audio. And do you know how long it would take to listen to Justin's new article?
Dude, he puts out some long articles.
It would take half an hour.
He puts out some very long articles.
I love it.
But I mean, tell me,
so
look at this. Look at the revisions. You know, everything looks good to me. I mean, this profitability hasn't necessarily changed, but even in the industry, you know, everything on Seeking says this is great. 1 year return is 100%.
Yeah.
I mean, the 6 month. Whew.
Yeah.
Look at the 6 month.
But you know, Hestia and them is involved, and there's been a lot of changes there now that will look at. He has a strong buy. I think he says it's still a double from today's price at 7.
Yeah.
So yeah, I was involved in PBI. I lost a little bit on it. I was involved at a much lower level than today, so I'm a bit annoyed by that, of course. But I couldn't hold like two long terms like I've done with ALTO and them, you know. So I switched to. No, I didn't switch, but I just focused more on ALTO because PBI is maybe not the most interesting business, but who cares if you can make money, right?
It becomes very interesting when I make money on it.
Yeah.
But yeah, I don't know if there's much to go through on the dash today, just because so much was up. You know, I could cover anything. I mean, yeah. So I'm not gonna go too crazy worrying about that.
No.
We did have a few tickers pulled in. I really didn't get a chance to go through and. Oh, did I not update this? You know what? Hold on a sec. I gotta actually. I'm like, why is nothing green? I don't know. What do you want me to? You want to go through those first few companies, or do you want me to screen a little bit? I mean, we can either go by metrics or charts, whatever you want to do.
Yeah, I think of the two ones I sent you, like INTT looked the most promising, but just looking at it real quick. But we can maybe do some screening before we look at them. But
well, why don't we do these? I'll do these two first, because the way my ad hoc thing works is these will get deleted if I start pulling in tickers from the rest of my spreadsheet, anyways. So
sounds good.
We'll pull these two in, and then we can bounce back to the dash or whatever we want to do from there.
Yeah.
Sorry, I should have just updated these before the stream started. And not that it takes that long, but still, it's just stupid. Yeah. Okay. InTest Corporation is a supplier of test and process technology solutions for use in manufacturing and testing. They have an electronic test, environmental tech, and process technologies. Have the operations in New Jersey, California, Canada, even Germany. They manufacture sell products under the Temtronics, Sigma, Thermonics, and North Sciences brand names, and the operations in this is so poorly written. It's just basically telling you where they have different operations, but let's get to what I wanted to say. Its key markets include automotive, defense, aerospace, industrial, life sciences, and security, as well as both front end and back end of the semiconductor manufacturing industry. So they provide supplying and testing equipment for semiconductors. That's what you should say, not all that jargon.
Yeah, could just have it in one sentence.
Right? I know, that's what I'm saying. Like, why wouldn't that be the first sentence? Then you can put all this nonsense afterwards.
How do you think this feels for someone who doesn't speak English like me?
Oh, you got to understand it immediately. Yeah. This is why people end up throwing out companies because they're like, I don't know what the hell I just read.
Yeah.
Anyways, so it's they provide parts and processing and testing for the semiconductor industry. Pretty small market cap, about 89 million. Few insiders. That looks like they haven't really diluted too much, up to almost $12 million or 12 million shares. This could be rounded up to. My numbers are all rounded, so it might not be. It's considered safe, so there's probably not much debt on the books here.
No, I have the same, and they have around 20 million in cash also.
Sorry, what was that last you said?
They have around 20 million in excess cash.
Okay, perfect. Looks like book value's been pretty positive the last few years. Margins are down slightly, but not they're decent margins anyways. You know, they're not like 1% is more what I'm saying. No dividends, at least not in a very long time. Earnings have been decent. Last year, or 2023, was a really big year for them. This year so far has been a little bit slower, but much more on par with their average. They're positive on cash flow and simple free cash flow per share basis.
And it seems like they have taken on the debt the last 3 years to buy some companies.
Okay. Retained earnings look pretty consistent. And like you said, it looks like they've had some acquisitions over the past few years. Sorry, I always have to check to make sure you guys can see where I'm pointing here. So overall, looks like the business itself is doing pretty good. I'm going to add this to my database because I have not looked at them before. And then, like we're talking, about 20 million in cash. They have 33 million in liabilities, so I got to see exactly what those are.
I have them here. Let's check. There's 10 million of them are leases.
Okay. I'm just pulling up the SEC report while you're going through. They have a term note and other long-term debt is about 12.
Yeah.
So obviously well covered in terms of the debt.
Yeah.
How much did it say? 33?
Yeah, 33.
All right. So either way,
they have a little bit of debt now. Due in the end of 2024, and then the next one is in 25.
Yeah, so it looks like a chunk of it's right now, and it looks like okay, this is just the term loan, and this is the remaining of all maturities. So either way, though, they have plenty of cash for this, and going forward, that's going to really clean up the balance sheet.
Yeah.
You know, they'll have less. They'll have less cash, but at the same time too, they're fine right now.
You can maybe say that you see a trend that the debt is rising a bit, and so is the share count, which you don't necessarily love that to see that too much, you know.
Yeah,
but at the same time, they are in growth mode. They are acquiring companies, so you know, revenue has gotten a lot up also since 22, where they started to do this.
Yeah, and I'll say, you know, they had this acquisition back in 17 and then another in 22, and it looks like things have kind of kept up. They've done pretty good. Margins are just slightly down here.
Yeah, they are.
Which, you know, SG&A costs were up. So it's kind of whatever, but, you know, they did have a really great year in 23. And then also, you know, overall, I mean, that's 26 million right there in the past 4 years. So I don't know. I think they're pretty well covered. I don't think the debt is outrageous. If anything, I think that debt level is probably healthy. And, you know, it's coming due right now. You think about this, the 14 million is going to come off. It's going to put us back down to 20, which is kind of where they've been running.
Yeah.
You know, and if rates start to come down, you know, that's better for any of these companies that have the debt, you know, as rates come down. So, yeah. It's not concerning is what I'm trying to get at. I think it's...
Yeah, no, I agree.
I think it's safely levered, essentially.
Yeah.
All right, so it's trading at about 7, which is at the higher side of what I value. Sorry, what'd you say?
I said they are 12% to 52-week low.
20%. Okay. Let's pull up a chart here just so we can kind of see. Okay, so was this earnings?
I'm not sure. Probably.
Whoops.
Let me pull up the chart to see. Yeah, this was earnings.
All right, so I will say ironically, people are bullish on the story, but the numbers aren't following that story.
No. But what you see though, after earnings, there were 2 insider purchases. They are not big, but I kind of like to see that though on the drop. Two of the directors are buying, you know.
True. Do you know how much it was in percent for them? Like, was it a big increase?
Says plus 12 on one and plus 3 on the other one.
So it looks like their operating expenses were quite a bit higher.
Yeah.
Operating expenses up $870,000 though due to a $2 million incremental costs from the acquisition. So that's also kind of, I mean, they took on a bigger part of the company. You know, like they're buying a company, so they're going to have higher operating costs because now they're paying for that company. So that's not all that crazy, to be honest. Yeah, well, I'll have to see what these acquisitions are because I think that's the biggest thing right now is it looks like they're doing fine. And, you know, right now, if they hadn't bought that company, you think about it, think about where their cash would be. You know, they just spent $20 million. That means they would have had almost $40 million on here, which means this debt would have been really well covered. Like I said, they did it's a safe acquisition. They spent about $20 million. That leaves them enough cash behind to cover their current liabilities. So now it's just trying to figure out where we're at in that cycle of you know, and they've been growing book value pretty steadily.
There's a comment here saying, but this account has one comment and it's this one, so I'm not sure, but it's saying like the acquisition of C Science did not yield the anticipated outcomes. Subsequently, legal actions have been initiated against INTT and Nick Grant, respectively. I don't know what that is about.
So it's saying it's diversifying. The company is still primarily exposed to trends in the semiconductor industry, so a very cyclical industry, and is probably in a bit of a pullback since it had a pretty good year last year. these trends have been a bit hard to predict, which I agree. I have no idea how you are I don't know how you're predicting the semiconductor market. That one is one to me that I just kind of listen to what other people say, because I really don't have much of an understanding of how you would think it just continues to grow, but it doesn't. It doesn't seem that way. I don't know if it's all transport issues and making sure that, I know it's very political in terms of the different countries that are involved. But they said this is why they keep a strong cash position and keep their debt low. Low price to free cash flow multiples. That means that technically he's saying this could be an opportunity for a takeover. It's continued to execute in its years prior, and I anticipate they would continue to do. The result is a marginally larger company that deserves a marginally larger valuation, even though the market was slow to appreciate that through the fall and winter. I think the market is failing to appreciate the full potential of the company. Test equipment is an essential part of manufacturing. It's not going anywhere. So obviously they have like a niche business that they're going to be needed. So yeah, I would like to know more about this. Why is there a lawsuit against them?
I'm not sure. I don't find it anywhere else, so I'm not sure if it's true. He said that in April, I think.
Yeah, I mean, just off what I'm getting here so far, is it's something I'll probably keep this just in my database and just kind of keep an eye on it.
Yeah. Dane, did you check the yearly 1 year chart?
I had just pulled it up.
Kind of look a little bit good on that one.
Which it does look like. I mean, it's tough to say. Like, this might have been the run up here. It doesn't look super strong. Now it's still going up, so it could break out here. I'm not convinced that if I was going to try to trade this that I would go off moving average. I might put in bid orders around this lower Bollinger Band, just for safety reasons, just so you don't get caught in it turning around. But I will say, my fundamental values are usually pretty conservative, and I got around $7 for most of my, and that's even below book value, which, I mean, this has some debt, and it's probably a lot of brand name and things. So this tangible doesn't necessarily matter to me so much for a company like this. But I'm not saying I'm buying this right now. I'm just saying if I was, and this was the only stock I could look at, I'd probably be putting in bid orders around here, and seeing if I could catch it where the price drops down to here. That's how I think I would play this one right now.
Yeah.
And obviously, this move here. This one was tough because it did pull away, but as it pulled away, it kind of kept pulling back. Now, as sentiment starts to change here, and you start to watch, this become positive, I guess you could have played it off the moving average throughout here. So I don't know. Maybe it's going to hold at the moving average. We'll see. I just don't know how much of a move we're going to have here.
Yeah. But I agree on the fundamentals. It actually looks close to what I can consider a fair price where it is right now. However, you need to also give them some time to see how the acquisitions are going, and maybe they buy other stuff as well in the future. So they are in growth mode. Can change the numbers if they are successful at it. I guess that's the hard part, but right now it's like I I think maybe it's around. It needs to drop for me to enter at least.
Yeah. For me, I'm just saying, you know, it's a tech company, so I said it's a little expensive right here, and I don't mean it's like too expensive. I'm just saying like it's not cheap enough that I'm looking at it like holding it fundamentally. Obviously, a lot of acquisitions. I said low debt. I think management's actually done a pretty good job. So I did label it as good man. I'm giving it a 3 on my confidence score. And for this one, I think honestly, in terms of figuring out what I would think like a decent price value would be, is I would use this longer term chart here. I'd probably say the value here will bounce between this section here. So I would say anywhere from like 650 to 930.
Yeah.
I can zoom out more. I mean, you could argue it could get down to 450 if things look really bearish. I think that would be rare. It would get down that far. But this was a pretty big down move for it. So who knows? But I mean, just a year ago, this was trading at $25.
Yeah.
So really a pretty substantial pullback in the last year, which I'm sure if you match this to the semiconductor industry, this is probably a pretty similar chart.
Yeah, I assume so too. I'm adding it to my tracker sheet just because I want to see if it can drop towards, you know, like you said, 640 I put in.
Yeah, I mean, and it did, you know, I said 650 on the low side. This lower Bollinger Band did touch 625, so
yeah.
It could get down that low. Like I said, I'm not buying it here, but I think that's how I would play this right now if I was going to.
Yeah. And keep in mind, if you haven't watched the streams before, like these price points that we're talking about is also maybe just to trigger our attention if it ever reaches there again. So it's not necessarily like, oh, if it reaches this price, we buy it, you know?
Yeah, no, that's what I'm saying is that's what I would do, but I'm not, this doesn't have enough for me. I don't have enough conviction or anything like that.
Yeah.
The one thing that I do want to do is I'm interested in this transcript. I'd like to just see what the actual management's saying. So I'm gonna save that for later. I keep making sure that on these companies where I'm like, I think I have like an idea of what's going on, that I read the transcript, because it really kind of clarifies what management's saying going into the future, and also just kind of, it's good to hear what other investors ask. It kind of gives you an idea of what someone who's actually following the stock pretty well, what they're thinking and what they're interested in, what matters to them. It kind of catches you up on what's going on with the stock pretty quickly, I find.
Yeah.
And I'm just not going to read it on here. I think that's not important at the moment. But I was thinking, you know what we should do, Johnny, is for instance, when I pull that down on my next stream, just make some notes about it, and if there was anything I found interesting in those, on the next stream I'll do like a little recap and just say, you know, we looked at INTT and you know, on the transcript, this is what I got out of it.
Yeah, no, I agree. That could be beneficial.
And what did you say for insiders? What did
Well, it's not a big purchase at all, but there are two directors who bought on the drop on the earnings.
I will say, yeah, but a 12% increase is pretty good.
Yeah, that's good, but the other one was just free. Is it free? It says.
Man, look at this guy's timing. He sold at $26 and just bought again at $6.
Yeah, that's what I'm saying. Like, it's meaningful when they buy on these drops also, because you know, he seems like a good investor.
Yeah, I'm gonna add insider to this, and
yeah,
I think I'm just gonna put it on deck. Just I might go back and change that to needs more if I read the transcript and I don't like it. But if he's buying right here, that's somewhat interesting to me. like
Yeah,
you
I
said,
agree.
it's not a huge amount, but in terms of his percentage, and it's what he sold off last time. I think that's a pretty reasonable thing to think about.
Yeah, I agree. Did we check Whale Wisdom? I assume they don't have a ton of owners, but maybe we see some names.
Hang on, I'll pull it up in just a sec. I'm just updating this other ticker.
Yeah.
And actually, see, we have some viewers in here, so thanks guys for tuning in. I know it's early. Well, depending on where you're at.
Yeah.
Maybe this is mostly our European crowd here. I know in the States it's early.
I don't see any familiar
Juniper.
names on Whale Wisdom.
Isn't Juniper value?
Sorry?
Isn't Juniper? Aren't they usually more
Yeah,
value
I
based?
was just checking them. It's their ninth position, but I don't know. The name just seems familiar, but I can't say where I had them from.
Well, they added here. I've definitely seen them before, but they are pretty concentrated, I would say.
And look, they have owned for many years.
Yeah.
And they are down a little bit then, because the estimated average price is almost $10 for them.
Yeah, I mean these are a lot of like small cap names, things I've looked at before. So they are more interested in the kind of companies that you and I tend to look at. They have a lot of healthcare, which I'm not necessarily a big. Well, not a lot, but they do have some. But either way, so yeah, I mean I'm not going to argue that there's not owners.
Yeah.
CM Management. This is probably I have not heard of these guys, but it looks like they're probably. Now they got 73 positions, but that actually, if it's ninth for them and they got 73 positions, it's pretty good.
Yeah, I agree.
And they got in around $10. They were interested at 10. So
yeah, they are down a little bit then, but I just added them to my tracker sheet.
So I'm just trying to close some of these windows. I just want to make sure the stream's running good. Okay, interesting. All right, next we have CRC, or California Resources Corporation, is an independent energy carbon management company committed to energy transition, produces low carbon intensity oil in the United States. It's also in developing the carbon capture and storage projects in California, which is becoming such a big thing here. It's focused on building, installing, operating, and maintaining carbon dioxide capture equipment, transportation assets, and storage facilities in California. It's got operations in oil and gas basins, including San Joaquin Basin, Los Angeles, Sacramento, so all over Cali. Has a large ownership interest in several other oil fields. So kind of got operations all over, but it's also in terms of it's really more capturing the carbon, it looks like.
Yeah.
Actually, it's a decent sized company, almost 5 billion market cap, so just on the high side of where I tend to look at things.
Yeah. And on the metrics, they are a little bit expensive, but if they fall a little bit, it starts to get a bit more interesting. But what I also register is this doesn't seem to move much on the chart, because it's trading now 13% to the 52-week high and also 17% to the 52-week low. So it seems to not move a lot.
Yeah, so not a very volatile stock, which is fine.
Yeah,
but something to keep in.
But look at the inside the purchase at $48.
So massive stake was taken by this director. And like you said, at $48, which tends to be, which ironically, there's a lot of buying and selling in that range. But either way, about $1 million was taken on 8/13. So I would imagine that means they're bullish.
Yeah.
Revenues are down for the year, but it looks like it's pretty cyclical. I'm not really sure why I have a 0. They must have got shut down in 2021. That's brutal.
Yeah.
Usually I'm scared of oil type stuff in California, but these guys are actually doing carbon sequestration capturing. So like I would think that this is actually a good market because California is like really big on, you know, trying to keep CO2 rates low and, you know, healthy environment, that kind of stuff.
Yeah.
Or pro environment, I guess, not healthy environment. It's stupid sounding.
And they've had some asset sales the last 2 years. But also, does it worry you if you look at the debt, Dane? It has been increasing a lot the last year.
Yeah, but also back in 2020, I mean, look at the debt that they had back then.
Yeah, true.
They must have spun something off to get rid of that debt. How the hell did they? Oh no, they they diluted the heck out of shareholders.
Oh yeah, I can see that now.
So obviously that was a tough period. 2021 was a real rough period for them. But since then, been buying stock back.
Yeah. And the equity growth has been pretty good as well since then.
Yeah, and to be honest, even though like you said the debt's high, I mean they basically have the cash to match it.
Yeah.
So
yeah, they do.
That's not bad. Earnings have been pretty steady. This last year has not been as good, not even close.
Yeah. The only thing that like I'm just looking at it quick now, but I don't see really. If this goes to 60, I would be happy, you know, and it's already at 52.
Yeah, I mean, this is a pretty. Even though it stays in this range that you were talking, I mean, it goes up and down pretty good. So a really good swing trade stock.
Yeah.
So I would definitely wait for a pullback. I mean, you can see management was buying in like the 40s. So they like somewhere in here. Like they're thinking this.
Yeah.
So anytime it drops way down to the low 40s, just makes it look interesting just based on the chart here.
Yeah. Which it did reach on the last earnings and also a little bit after the earnings before that. And you know, on the other earnings as well. So it seems like almost a pattern that they fail a bit on the earning report.
It's interesting. It has such big pullbacks, and it's done that even before. I mean, it had a really good run up here where it's kind of ended in this territory it's looking at now. But even when you go back here, that's the same thing. So it tends to move actually. It doesn't go like way out of this range, but it tends to definitely bounce all the way up and down on some of these. And we're talking, I mean, look at in 1 week, you know, you're going from 40 to 50 and then 40 to 50, you know, like kind of crazy.
Yeah. Yeah, that's a good catch, because if you zoom out and check it from, you know, the pandemic, the pattern looks very similar. Like it has this big bounce up and then it's up and down, but kind of flat for quite some time, and then it goes up again and starts a new floor, you know?
Yeah, and overall, I mean, it's the company's just been up.
Yeah. But like you said, though, it is on the bigger side. Very different to the one we just looked at in terms of, you know, size and everything. But I'm not sure if I want to add this to my tracker. And by the way, there's like 8% short interest here.
Okay.
Oh, Dane, we have a comment. Hey,
yeah,
David.
I just saw. Hey, Dave. Yeah, we'll pull up GNRC or GNRC next.
Oh, nice.
Yeah, and as always, guys, if you have any tickers you want us to look at, yeah, just let us know. Let's see. Just wanted to get an idea of what some comments are saying on the story here. Yeah, this one's a little more complicated. There's a lot going on here, just at what these guys are commenting on. So honestly, I'm gonna probably read through just this actual. I want to kind of read this whole article to figure out more what's going on here, because I don't think I'm gonna be able to do it in a short amount of time.
Is this from? Was this the top one from Michael Boyd?
Yeah, I mean it's from May 20th, but still, just to get an idea of what's going on here.
Yeah.
Sold 200 million in senior notes on the 8th. Right? What's up?
Haven't you seen this Michael Boyd guy before?
I feel like I have. That name looks familiar.
Yeah, I agree.
And I will say sentiments changed to hold lately. Revisions are slightly up. Momentum's up on it right now, but that momentum probably changes quite often. On a value side, though, they're arguing it's not cheap. Now, granted, I know these are just the stupid grades they give here, but I like to just peek at it just to kind of get an idea of where things are standing. I'm not even exactly sure what they determine makes value, because I'm sure it's not what I do. But either way, all right, I'll probably look deeper into this one when I get a chance.
Yeah,
because I feel like I'm gonna have to do some reading.
I'm not sure if I want to be involved in another company where there's a carbon capture trigger, you know, because I'm in ALTO.
True, just for hedging against
so
it.
For me, that's you know.
It's been a while since I looked at this one. We can take out Too Young. Yeah, I'm just gonna leave it there. But in terms of pricing, you got the dividend book values around 30. If we're gonna trade at a premium, it'd be 10 times cash flow from operations. It's quite a bit. I don't know. I would argue that it's trading on the high side.
Yeah.
Oh, I forgot I'd pull those down. Now I'm starting to get so many damn articles. I'm losing where I'm at. Yeah, I would argue upper 50s to low 40s is where it's interesting right now.
Yeah.
I'll say 45 to 55. So not a lot of room to play either. But we'll see. I mean, once I read through things, I'll see what's more going on with the business, because it's kind of tough to say right now.
This is kind of one of those companies that you know, if something bad happens and you get a massive drop, all of a sudden it gets quickly interesting, you know.
Yeah, no, I agree. But same thing though too. It's been in a general uptrend, so
yeah.
But I do think it's trading at like a premium on everything I can see. I agree. So, you know, and they just took on another 200 million from senior notes, so the debt's going up, not down. Yeah.
So GNRC then.
Yeah, is this actually loading this? It's saying retrieving data, but it's not giving me a number. Usually it tells me how many quarters or whatever.
Yeah.
Can I put it in here? Let's see if this works. There it goes.
This is the benefit of having gone through the process of building all of this. Dane, you know how to fix things.
Yeah, if it doesn't work one way, I'll make it work.
Yeah.
Just because that C1's my additional or my original ad hoc one, I have another way I can make these other ones all ad hoc, so I can just type it in. But at the same time, too, this uses a different formula to get this to pull in. So sometimes there's like a glitch with what do you call it? The macros. So if that's the case, I have to just go a different way about it, essentially, is what I'm trying to say. All right, so Generac. Thanks, Dave, again for the throw out. Generac, if you guys haven't heard of, they provide backup prime power generator products for residential and commercial applications. Solar plus battery storage systems, which I didn't know that. I didn't know they did solar batteries. Energy monitoring management devices, engine and battery power tools. It has its domestic and international sections. They have the legacy Generac business and acquisitions that are based in the U.S. and Canada, which I actually know a few people with Generacs at their house. It's a product offering consists primarily of power generation equipment, energy storage systems, energy management device solutions, and other powered product geared for varying and customer uses. It's residential automatic standby generators range in an output of 7.5 to 150 kilowatts. So this is more why I know Generac. People get them at their house, and basically if your power turns off, like if you lose power, the Generac kicks right on automatically and powers your entire house.
Yeah. Okay.
And they're slightly pricey, but I mean, it's a nice service to have at your house. You know, I like I said, I know it, depending on where you are, if you consistently lose power, I would definitely consider getting one of these. Luckily at my house, I've been pretty fortunate and I lose power pretty rarely, so it hasn't been a concern. But it's definitely a little on the bigger side. This is why probably we haven't looked at it, and I'm just talking on a market cap. It looks like though it's not heavily indebted by any means, so it's not like that necessarily totally matters. It looks like it's generating about $4 billion in revenues, which is pretty. It's definitely on its higher side. It's pulled back a little from 2022, which is probably when a lot of people had these installed. But like I said, they have other parts of the business too, so it's not just the Generacs themselves. Margins have pulled back slightly. Definitely trades at a huge premium to book value. No dividend. Shares, it looks like they've actually maybe purchased some shares back.
Yeah, since 21.
And I mean, share count's actually just been going down pretty consistently. Earnings are steady and pretty good. Cash flows, simple free cash flow looks really good. This last year, looks like they have kind of up and down years too. Like some years are really good, other years aren't. Retained earnings are pretty consistently high. And it looks like they're doing quite a bit of acquisition work. CapEx is somewhat high for the company. I get that it's levered, but not heavily by any means. Like it's not telling me to offer like a lot of shares or anything like that.
Yeah, I have the same.
They don't have a ton of cash on hand, which is why it says it's levered, because they have almost $2 billion in debt. But let's actually take a peek though and see what that debt really is. Other than that, just at a quick look, Dave, it looks like it's definitely trading at a premium. So I gotta start digging in here a little bit more to see where we're at here. Doesn't mean it is. It's just we'll head over. Let's take a peek at a chart here and see how we're looking. Trying to close out all these windows. I hope the stream's working well, because this is just acting kind of slow here. So stock's been doing well. It's definitely in an uptrend. If we zoom out here a little bit, it's traded much higher than this though. So it kind of had a pullback here, and it looks like it's just been slowly trying to push back up to this same level here. But it's traded all the way as low as 80 back in October of 2023. So it looks like it's pretty volatile, actually, how much it moves around. Bigger zoom out period. So it had a huge run up during COVID, when probably, everybody's buying these kind of things. People are at home, big improvements on the house, putting these kind of things in. And then obviously the business slowed probably quite a bit back down. But it looks like now we're starting to probably find territory where the business is going to kind of run in this region. Yeah, no problem, Dave.
I'm looking at the debt, Dane. The big portion of it is due 26 and 27.
Okay.
And they're paying around 7% interest on those two.
So definitely a concern will be that their cash position is going to have to increase here. Now, like I said, they've been doing a lot of purchasing. Hold on, this thing froze.
A big amount of goodwill on the books.
I mean, they are generating great earnings. So I will say, if they can have a few years of getting, some of this cash, and they're not dropping $400 million on acquisitions, like let's say it evens out around 250 over the next 2 years. If they're not doing any purchases, it'll probably put them in a decent position to be able to handle that debt, though. How much is actually going to be due?
In 26, the tranche B term loan is due, which will be 530 million, and then the year after 600.
Yeah, so I would think that first one's definitely going to be manageable, because they could definitely generate like 200 something each year and get that into a position where they can handle that debt.
Yeah,
it might be a little tight.
And then you get the revolver also in 27. So in total, in 26 they have to pay 600, and in 27 it's 750.
Yeah, so they'll probably restructure one of those and keep some of this, because it looks like they've ran at about $1 billion. So it looks like they'll probably try and pay off one of those and then leave the other one.
Yeah.
Because my guess is they're going to try and return to that leverage ratio. They probably upped the leverage here because this year was so good here, and they were trying to make these acquisitions and time everything well. And now that the business is back to kind of normal timing, like as in we're not in COVID times, they'll probably try and get that leverage ratio back down. Now, this is me talking about this, and I have no idea anything. So let me actually pull up someone who knows what they're talking about and see if I'm somewhat correct. Strong Q2 earnings and forward guidance, which is huge. So management's saying that they July EPS of $1.35 beats by 15 cents. Revenue beats, and then in August. So this is another one of their acquisitions. So is this Q2 or Q3, this earnings right here?
Q2, I assume.
Okay, so this is Q2. Okay, just making sure. So just go over just the quick. So updated valuation. Considering management's updated guidance, I made some minor tweaks to my original model, with management raising the full year revenue forecast to 4 to 8%. I've elected to raise my target to 8% revenue growth. Although that's the high end of the range, I believe the combination of an extremely active hurricane season. Oh, okay. So that's another thing to consider is that, you're going to want generators and stuff like that during hurricane type seasons, because obviously you're going to lose power. So that's obviously a big swath of the United States that will be interested in this kind of thing. With these tweaks, he's looking at for year 2027 EPS estimates is 12.19. So at 12.19, he's applying a pretty good premium of 20 times, well below GNRC's 5-year average of 26. Okay, so that's why he's doing 20, because it's under the action. That'd give a price target of 243, which implies an upside of pretty high, 60%. Risks, why I'm extremely optimistic on GNRC's long-term potential. There's always risk to consider with every other investment. A continued high interest rate environment and failure to realize a housing market and residential construction recovery. We have already seen what a restrictive interest rate environment has done to the C&I business, specifically with companies delaying construction and CapEx projects. So I mean, rates are supposed to come down, so that's bullish in terms of that. Again, working against that thesis. Jeez, gotta wake up here, man. But yeah, so I guess a big point would be, you know, new construction, housing in general too. A drawdown in consumer health. GNRC is highly correlated to the housing market, and as a big ticket discretionary purchase dependent on overall consumer confidence and health. So, okay, he's not saying consumer. I thought almost like, what does this have to do with consumers' like health? He's saying their monetary health. A lack of major power outages in the next several years. GNRC's growth and awareness is dependent on power outages and basically increased extreme weather, which I would argue that it seems like we keep having more and more wild weather lately, not less.
And we talked about the shares being repurchased, and they have a repurchase program active now still. And this guy is also saying that they are very shareholder friendly and that they respect the position they are in, and that they have done a good job in terms of giving value back to shareholders.
Gotcha. Edward brings up a good point talking about recurring revenue, basically asking what the average life of generator is, because obviously you pay a lot up front to get the generator, but then you have it, so it's kind of like a one-off purchase essentially. And he says, and this is, I think, decent to respond to that. Well, GNRC doesn't focus much on parts and repairs. As you mentioned, diversifying revenue stream is key. I touched on this in my initial article, noting that other products and services are accounting for about 12% of sales. And while that's not certainly a needle mover, the business has grown like a weed, about 25% in 2023. It has a forecast of 21% through 2026. So there's still room for growth. So and as like, this is a younger company too. So in terms of repairs and stuff like that, a lot of this stuff is pretty new. So right now it doesn't need repairs, but let's go out 5 years. A lot of this stuff might need to get more repairs, because most of these products, I would argue, are probably have like a good 10-year shelf life before they start to really run into some issues. Now, being it's a big purchase, I imagine a lot of people will actually probably pay for repair services instead of just buying a new generator. And then possibly in the long run, let's say you put a GNRC at your house, and let's say 10 years down the line that the product's so much better and, it might be worth upgrading it. So maybe you spent $5 to $10 grand today, maybe 10 years from now, you might want to get that upgrade. You might pay another 5 or 10 to just get a brand new system put in. I'm not sure about that, but so maybe on a long term, you could have at least customers who come back to you.
Then just did you check the insider purchases here? Because the CEO is selling a lot of his shares, and I'm not sure how meaningful this is in this case. But what do you think about that? He's like constantly selling and selling and selling over the years. Like trimming 1% every with every sale, I think.
Yeah, I mean, I don't like it. But it's 1% trims, which makes me think that he's probably just I mean, you think about it, the guy owns a ridiculous amount of the stock. So, you know, selling 1%, I mean, it's a lot of money for himself. Obviously, if he was to sell like all of a sudden like a large percent, that would scare me. But just the 1%, he's been doing this the whole time.
Yeah,
I
he
mean,
has a bit. No, sorry, that was another name. But he has a bit of the CMO had a big portion of his sales in 22, but that's probably not meaningful here now.
Yeah, you know, I think the company probably took off, and it's probably going to hold where it is for a while. I actually wanted to just pull up ownership and see what we have here. There's definitely people with large investments in this, and there is some people selling though. So I would argue that it's, you know, Dave, if you like the business and you're looking at holding it for a long term, I think that would be the right way to play this. Where's my this one? You know, it is on the move up. I mean, I don't know. I mean, it follows the same charts that we've been talking about. I mean, yeah, you could swing trade these too. So it depends on, I guess it depends on what kind of move you're taking. But it looks like, and I would say the overall trend is still upwards. You know, even on a longer term. You know, it had this big pullback here, and can it make it back into the 200s? I don't know. That's a long way to go. It's not going to make it to 500. That's pretty wild. It was at $500.
Yeah.
So I would say it's going to be a slow grind upwards, just because it's already a big company. But at the same time, too, it looks like it's a pretty well-run business. They haven't over indebted themselves. So yeah, I guess you know, if management's guiding is up and whatnot, I think it looks decent here.
Yeah.
It's just a little big for me.
Yeah, I agree with that. But there's a lot of things that I like to see, but also I'm a little bit confused because there's also and what do you think about do you think they are in a position soon where they will start to pay a dividend?
They could. I mean, you know, if you wanted one thing to interest shareholders, the only thing is with that debt coming up, I think they'd be better off to focus on making sure they can cover those debt payments.
Yeah.
But once they get their leverage ratio back down, and this isn't considered levered, I would think that would be a good time to continue share buybacks, continue dividends for shareholders. Obviously, they've done a lot of acquisition type work. What's their research costs? About 5%. So they've been spending quite a bit actually on making sure that they're improving their models and that kind of stuff. So I would think too, that's another thing is as we head into more of a solar environment here, go Maxion, you know, you're gonna have to store that energy somewhere. And you know, that's definitely a market they could get into as well. I don't know. I think it's a pretty good product, to be honest.
Yeah.
So
okay.
I would say right here, it's not like it's trading cheap, but I think if things continue in the right direction, it's probably not a terrible entrance here if you're going to be a long-term investor, and if you're going to trade it, you know, it's not crazy large moves because it's already at $140. Like just a stock like this, it's going to be tough to move much. But I mean, even on these charts, I mean, it still swing trades pretty nice. It even technically trades pretty well. So yeah, if it was me, Dave, and I was looking at this, I would probably wait for some kind of pullback here, just because it's just on a current up move, and either that or you could buy here and slowly average in and average in on the downside, but. I don't know. It looks like with guidance going up, I would think that's bullish.
Yeah.
Not necessarily cheap by any means. And if you're like a real value investor, then I would wait for a bigger pullback. Just because I think you could get you've seen it where it got up to this $1.50 range, and then I don't know if this was earnings or something, but you get bad guidance and it pulls right down. So you could probably play it that way too. Try and catch it on one of these downturns, and then you see it comes on this huge downturn, and then good forward guidance and come right back up. So
yeah,
pretty large
that was
swings.
earning. That seems to have been the last earnings where they disappointed, and now they have had a full year almost where the stock is reacting, or the share price is reacting positive to the earnings reports.
Yeah.
So they are in a good cycle probably here.
Yeah, and yeah, Dave, and sorry, I would go more into like the actual ins and outs of the business, but we just tend not to read transcripts and go and like read 10Ks on here just because like no one wants to see us read a 10K. Like it's just that's pretty boring stuff. No, don't get me wrong, I enjoy it on my own, but I'm not doing it on the stream. But I will say it looks like the market's pretty harsh when there's negative sentiment. So anytime there's something that comes out that looks rough, I mean, the company really does pull back. And I think that's just because it is an expensive stock in terms of it has premium multiples applied to it. And when you have premium multiples, if you don't hit those numbers, everyone's disappointed very quickly and you can see a sell-off. So I guess those are all different points to consider.
Yeah.
But I'm just going to throw some notes on this in here. It's just large for me, but that's no problem. I think it has good fundamentals. The debt's fine. I feel like it has good management. I kind of feel like management's doing a lot decent. It has a lot of acquisitions it's done. And I actually think it has a good narrative right now. I'm going to put it on deck. I'll give it a 3 for now. I would say around 100 for me would be a super interesting buy. That's why I'm putting that there. Because like I said, this would, if I was going to do this, would be like, I would become really interested in this on a longer term hold. And then on the upside, I mean, those guys were arguing over 200, so I'm going to put 200 as kind of like a somewhat limited view on that. So, I mean, that's still a huge range. So, I mean, you could capture 100% move on a pretty large company here. Or even a 50% if it continues to push up to that $200 mark and then reassess there, when it gets up to that range.
Yeah.
All right.
Maybe this is more for another. This would be more fitting to one of the longer term portfolios, right, Dane?
Yeah, I would agree. In terms of specifically for these portfolios that we're running here, we're looking for pretty outsized returns. But I will say it's not like you couldn't trade this. I mean, you could do really well with this, even at where it's at. If you look at like the daily chart here, I mean, hell, if you got in at a 137 and you were able to capture a lot of this move. It's a pretty short amount of time. Now, it's not the fastest return I've seen, but it's not bad.
Yeah.
It's just a little below usually what you and I are tending to look at on these kind of... Because to be honest, I'd probably be able to get in at like $140 here. Somewhere in this, on one of these days right here would become interesting. And then if you rolled this up, MACD starts to collapse in here, you'd probably get out... Yeah, it's not a huge return for this many days. And it's kind of even tough to trade it just because it's not huge moves. You could capture 1% moves, though, if you were going to scalp it, but not the easiest one to do.
No. Hey, Dane, I kind of have to go soon.
Okay, I mean, we can call it here. I also have stuff to do today, so we didn't get through too many tickers today, but from what we looked at, I thought a lot of stuff was interesting.
Yeah, I agree. I thought from the three we have gone through, I think for me INTT is the one that is most interesting in terms of what we are looking for here, but all three I think had interesting elements to them. Yeah.
Yeah, no, I would agree. You know, I didn't really get through the dash, so maybe I'll save some of these tickers for Tuesday. I'm trying to think. I don't think there's any reason I'm not going to stream my normal time Tuesday.
Yeah.
So I'll go through those there. We'll see where we end up next week. Hopefully, I can get IMMR to turn around here and it doesn't continue in a real bearish sentiment there. If it does, it is what it is. I'll consider, like, I don't know, trimming the position if it doesn't do what I want, or if it starts to slowly work back up, we'll take that for what it is. I'll go through INTT in California. I'll go through those transcripts and stuff, and then report on those on Tuesday, what I liked about it.
Sounds good.
If I have time, maybe I'll do a little more work on GNRC. Like I said, it's a little big for me where it is, but maybe at least just read the last transcript to get an idea, especially since they're talking pretty positive guidance on it. So
yeah.
All right. Got anything to add?
And by the way, I'm in because I heard you spoke about it on Tuesday that the channel could need maybe a Discord server.
Oh yeah.
I'm working on it. I think maybe we can have something up this coming week, and then we will post a link in. We have social media links in the live stream description, so everyone who's watching will find the links there. We're gonna let you know about it when it's up and running. I just want to set it properly up with everything,
Mm-hmm.
So yeah. We're gonna have a Discord server soon.
Yeah, and we'll be super excited about that because we can do pretty much more live updates. For instance, if I'm gonna take a position, I'll let people know when I took it, and then that way you can kind of more live see what I'm doing. Because it's the problem with some of these swing trades and stuff. Like for instance, I've been trading. There's companies I've traded during the week that aren't even in the portfolio. So I've already been in and out of them.
True.
Because sometimes I cover stuff and I'm waiting for a move and I'm just watching it and I'll put in a low bid. And I've tried not to get greedy and go into the same one a bunch of times. So I don't want to. I want to limit my risk that way. If you capture an upside a few times, you should take it for what it is and consider that you got the move. Otherwise, you're going to also capture the downside. So just kind of where it is.
It will be good. And if anyone has any suggestions or ideas to what they want to see in a Discord server, let us know in the comments here, and we will try to set up a good one that we can use for just staying a little bit more in touch with everyone and discuss things, and maybe hopefully have some fun too, between the streams.
Right.
Because a lot of things are happening off the streams as well.
Yeah, no, I agree. And the other thing too is just even how like Dave threw a ticker to us today too. That way we could maybe have a section where on the next stream we could say, hey, send any tickers that you guys want us to cover on the next stream. And then that way we already have kind of a list going into it, not, as opposed to trying to do it like a la carte, which is fine. But just that way we're a little bit more prepared for each one. Yeah.
And maybe it's like, I hope, David, according to your feedback here, you liked that we pulled it up and everything. And maybe other people will get even more value out of the streams then. And they can, we can customize it a little bit more to the people who are watching.
Yeah, correct. Because I have a few different ways to screen now, and I'll definitely find tickers to look at. But at the same time, too, if someone else is interested in it, I mean, it's then I'll be interested. I'll quickly tell you if it's not for me. But like NASCAR's throwing at me some of these crazy Chinese tickers, and some of those aren't for me. But to someone they're interesting.
We have had some good examples of people sending tickers our way that we both like, oh, this looks very interesting. So this will benefit everyone. So I'm excited to get the server up, and we will let you know when everything's ready to be taken into use.
Yeah. All right, everybody. Well, Johnny, enjoy the rest of your weekend. Everybody else,
Yeah,
have a good
thank you, you
weekend,
too.
and I'll be on Tuesday.
Good. Bye bye.
All right, see you, everybody.